Hello, welcome to episode 5 of the European Tech Show. We have got a banger today, but before we kick off, I want to introduce our co-founder, co-host, Luke Knight, and this is his first episode, and we are thrilled to have him. Let's go. Luke, kick us off. Who have we got coming on today?
We have a good, pretty stacked lineup this today. So we've got Peter Specht, VP at Creandum. He's coming on, and then Dan. He's a partner at SuperSeed. It's going to be pretty interesting to talk to him.
Yeah.
And then the latecomer, we had someone drop out. We've got Gianni, Cuozzo, super sub, founder and CEO of Exein. He's just announced his Series C, 70 million, which is pretty nuts. And then Baptiste Petelle, he's a founder of Early Builders and the Fleet VP of Revenue, I think, right?
Yeah, revenue and growth.
Yeah,
revenue and growth. What a beast.
So good combination, founders, investors, community builders and operators.
What a lineup.
We've got a lot of stuff to talk about in the news, some deep dives to go through.
Yeah, so we're looking at Hugging Face and their new robot. They're 2 new robots, or 3 new robots. There's 2 versions of one.
Yeah.
And then there's another one.
2 prices and then
2 prices, and there's a human-sized one as well. There's like 3
with like 66
bucks.
like I don't know ranges of movement or something.
But they
crazy.
gave it a weird name. It wasn't. They gave it. They said ranges of movement. It was a weird techie name. We have 11 labs.
We'll get into that.
Yeah. We'll jump in. We have 11 labs, North Zone backing, and AI debt collector Murphy. They have some interesting quotes from the CEO of Murphy to talk about. But a really interesting move from 11 labs. Really keen to jump into that as well. Starling Bank mulling an IPO in New York. This seems to be a recurring theme on the show.
The death of the UK capital markets.
The death of LSE. Such a shame. We'll also discuss Harry Stebbings talking with Sadiq Khan. They've got a bet going on Twitter. Harry's trying to get Sadiq Khan to...
Seriously.
Is it on to 20VC?
I think it's just... I think
it's just a chat, isn't it?
He's part of his... he's spoken to a couple of politicians.
Yeah.
I think he's got like a politics segment or part of his empire.
Yeah. Anyway, moving on quickly because we've got Peter coming in soon. Exein Partners looking to close in on a 400 million European fund.
Massive.
That is a crazy story. That's going to be fun to dig in. We are going over the timelines on the EU Inc. This whole thing's been a bit of a saga. Everyone's up in arms. No one's happy. Everyone's pissed. And then, of course, the Exein raising 70 million euros, Balderton, Lakestar, and a few others supporting the round. Keen to jump in. But we have Peter Specht, I think, coming in now-ish.
Any minute now.
Any minute now. Just checking. I can't see the invite. It might be on your cow. But as I say, deep dive's looking really fun today. The Sequoia partner round closing one's probably the one I'm most excited to discuss. Oh, I forgot as well. There's this thing called Plugged that I found recently. I've connected with all of the people running it on LinkedIn. We should maybe get them on. I came across them because someone shared something on LinkedIn. It was like founder versus founder fight night rave.
Yeah.
And I think this is an actual like boxing match. And it was stupid. I was looking at it had tickets on it, and it was like early bird ticket. And I saw it, and I was like, early bird, like someone in the early bird portfolio is going on to box someone. And I realised, it just meant like early bird, like
that's when you know you're too into the tech world.
Like,
You're too nerd.
Early bird boxing? What the hell? But no,
that'd be pretty cool. It's bring the YouTube vibe to founders. I think it's good.
Well, no, I saw in SF they recently had this like robot on robot underground cage fight thing. So maybe this is just the European version of that. Just get
actual founders, actual humans.
Couple pre-seed gangsters in just to sling it in the ring.
100%.
Fighting for funding.
Yeah, exactly.
which is interesting.
Hello,
Here's Peter tuning in now. Peter, how are we?
Hey guys. How are you? Good.
Good.
How are you?
Very good. Thank you for joining us. You're here, European Tech Show, episode 5. You've got myself, Seb, Ronan, and Luke.
Awesome. Good to see you.
No, thank you very much for joining us. We're absolutely thrilled to have you. Like Creandum is an amazing VC and an amazing pro-European VC. There's lots that we want to talk about, but I think the thing that we want to kick off with is the EuroSeed 50. I guess just tell us a bit about it.
Break it down.
Great. We launched last week the EuroSeed 50, which is a new initiative to map out the 50 most promising early stage startup across Europe and publish a list. When we thought about this in the startup ecosystem, the attention is often on the late stage companies and the scale ups, the big logos. And we wanted to turn that around and put the spotlight on the future, sort of the next generation of innovators. And thus we mapped out the 50 most promising early stage, so seed stage companies in Europe, and did so with recommendations from lots of seed funds, from lots of angels, and then curated a jury to sort of like pick the 50 best ones of people like Jason Lemkin, Gloria Bowyer, Midi from XDeepMind, and a few other leading angels, and curated this list. And the idea is simply to give the startups, the future generation more exposure. We know it's hard to stand out across 30,000 early stage startups in Europe, and we want to help those companies get the right exposure and focus and attract talent, customers, funding, and that's how we came up with the Creandum EuroSeed 50. Yeah.
Absolutely. And how are you, or how were the jury judging these companies? Was it a look at the team? Was it a look at the financials, their growth? How are they being assessed?
At the early stage, the seed stage, it's unfortunately, there's a little bit less data points than you have at later stage. So there were no financials or anything like that. But all these people are very active angels in the ecosystem. And so what we did is with input and recommendation from pre-seed and seed funds and angels before, we created like a long list of a bit over 100 startups across Europe. And then from this long list that we curated with the input, we let the jury pick sort of like their favorites, and they know some of the companies, they know many of the founders of the companies, and basically read through what they're doing and what their conviction is. Some are invested or angels in some of these companies, and through that we try to get to the best insight, sort of like of having a very curated list, long list, and then making sure we pick with a diverse sort of like jury the right 50 ones.
Yeah, amazing.
But of course, it's it's still seed. Yeah. So, there's you can't be fully right always at seed, but I think this is a very, very promising list, and maybe there's the next Spotify or Revolut in this list, and there's a solid likelihood for that.
And is there any plans to track this list over time to see how on the money you were in 1 year, 5 year, 10 years?
Yeah, it will be an annual list. So we're gonna do the same thing next year again. And we're also tracking and published some of the insights in the blogs around that list of across geo, across segments those companies are building, and some of it is interesting stuff. I mean, on the geo side, I think there's, for example, no surprise. 19 out of the 50 companies come from the UK. Then it's Germany and France being sort of like the second biggest countries present with around 10 companies. And then it's the Nordics and Spain following. The Nordics always have been, present ecosystem, and Spain has been one on the rise. And then of course, there's Benelux and CE. But that we're gonna look at, and I think we're gonna also track how this will track over or change over time, which might be some relevant or interesting insights.
Yeah, amazing. I'm kind of like shaking here and quite eager to get into some conversations about Lovable. Peter, you're probably bored hearing people ask you questions about Lovable, but I've been following them for a while. I have to ask, so what's it like working with Lovable?
Lovable, it's no surprise you're asking. Let's say they get very good attention these days, or for the past 8 months. No, it's an extraordinary company. And it's we've rarely, if ever, seen that growth in a company in Europe. And Anton is very vocal also about publishing his revenue numbers on ARR numbers on LinkedIn, and going from 0 to 75 million in ARR within 7 months is simply stellar and amazing to see. And how is it to work with Lovable? I mean, we try to support the company as good as we can and with full capacity. My colleague Frederick is the one in our team, sort of like working closely with Anton and the team, and then of course things like our talent team, trying to support them in their hiring efforts, etc. But I think it's to that question, it's probably fun and amazing to see. as they really have the shot of building a generation company in Europe.
I mean, move on.
I'm interested to understand what's different, with Lovable to other kind of portfolio companies. Is it the speed that they're going at? Obviously, like, they're growing so quickly, but is that because of their execution? We had Will Kaplan from Tano, and he was saying that they're basically like, the execution is crazy. The amount that they can get into the data and understanding where they're actually moving the needle is unbelievable. Yeah. What's your kind of thoughts on that? And can you see that, actually working with them?
Yeah. I think if we look at maybe what got Lovable to the traction that they are, I mean, when we met them, I mean, we knew the company since since inception, or since their first pre-seed round, and have been following Anton over the time, and then sort of like leaned in to lead the Series A round in end of last year, and shortly after the launch. And I think what you could see back then at the launch was, within a week since they launched, you had this addicting product. You had an incredible amount of instant gratification and user love. I guess you all have used it, but it's like a magical feel if you're a non-technical user or you're a business user.
I feel like a wizard.
I, for example, the first thing I did, I created a website for my mom, and she was like amazed. And I think that wow effect is what people really got. And I think what they've really nailed is, in the beginning, but also later on, is the flywheel effect. And if you remember, there's this edit in Lovable button, and I think it was a masterpiece in like driving user acquisition, but also in education of users. And I think what is different is, I think the speed of, I mean, to other products or companies, is the speed in which you see this extremely strong signals of product market fit, where you see this massive amount of user love. And then, of course, as a result of the virality that was partially, that was also driven by them, it's like a very unusual high pull from the market and strong product market fit. And I think that led to, the very strong traction. And of course, then it's, executing on that, continuing to grow that, continuing to build a superior product, etc.
Yeah. I think you touched on something really interesting earlier. So, we discussed them so much on the show, right? We're always talking about their distribution, their viral coefficient. Your great phrase there that you mentioned there, Peter, is like it's an instant gratification product. Like you, as soon as you start using it, you get value out of it. And I had the same with granola. When I first used granola and it summarized my first meeting, I was like, wow, this is really cool. I think it's something a lot more common in these consumer focused apps or entities. You mentioned, and this is part of what I'm coming on to, how good Anton is at distributing growth metrics on socials. He's a huge spokesman for the company. He's constantly tweeting out.
Yeah. I don't know how he has the time.
How does he have the time? It's like this cool graph, or like this customer just made X amount ARR doing this, or here's our hockey stick growth curve, and like he does such a good job of it. I'd be curious to understand how much of the inbound has come just from his X account or his LinkedIn. But do you think that that's a trend that we're seeing in the B2C space, that founders should be more front-facing? Founders should be on Twitter tweeting stuff out. Founders should be on LinkedIn building in public.
Yeah, I think it is a trend that we're seeing in the market. I think that LinkedIn, Twitter, or the socials have been really become core platforms for acquisition. The reach you get there is incredible. I haven't checked, Anton's Twitter follower last time I checked on LinkedIn, I think it was more than 60,000 or like 60 to 70,000 LinkedIn followers in a very short time, which is quite a lot and gives a lot of reach. And the interesting thing here is that he's a very strong technical founder who has been early in the AI wave. He's been with Sana or Depict. And that you see a founder like him that comes from the technical side, being so extremely good at that, on sort of like the marketing and showing user stories and making it very tangible to follow the Lovable journey online, is, I think, a rare combination.
Yeah.
And I wanted to ask, you've done a lot of investments in the SaaS space. Do you see Lovable as a threat to a lot of the SaaS platforms or applications that you've invested in or that you see? Do you think people, do you think that idea that you can build SaaS tools easily and cheaply on Lovable presents a threat to a lot of the existing SaaS businesses out there?
So far they are more making our SaaS companies more productive in sort of like shipping product in using it internally. And I speak with several of our companies that are using it internally to work on product, to ship stuff, to prototype, to iterate, or to enable business users. And I think for there we see more productivity gain with it. I think there's for building software, there's much more than just the building part of it. So all these sort of like coding tools go into the building part or the execution part of it. But if I, for example, think about one of our portfolio companies, which is Factorial, which is a unicorn from Barcelona in the HR space, there's local regulations in each market. There's core HR knowledge. There's, payroll knowledge. There's sort of like different tax things like shift planning. Like it's a very complex thing and actually a complex product to build in like local regulations and compliance for companies. And I think that's it's different things that you need, and it's different modes you build up also beyond just the coding exercise.
Yeah, that's fascinating. I know you guys led earlier this month. Creandum led a £5 million seed into SuperScale, which is creating these sort of viral short form content based off a prompt. It seems like an AI UGC sort of play, a super hot space in the B2C realm. We were speaking with Will Kaplan from Tano the other day, who's building he's building like an AI employee that can basically do end-to-end influencer marketing for you, so that it will source individuals for you, and it will also close the deals. It runs the whole thing end-to-end, negotiations, price stuff, everything. This space is fascinating to me, and it's something that we experimented with at Convergence when we were looking at, how can we just flood TikTok, YouTube Shorts, Instagram Reels, all of the short form realm with content from us, but we don't have the time to be doing TikTok dances in front of our iPhones, for half the week. What do you think about this space? Obviously, you're bullish on it if you guys are doing a 5 million seed check in there, but participating and leading. What do you think about this space?
So I think we are bullish on the space, and I mean, if Creandum makes an investment into SuperScale that plays in the space, obviously we spend a lot of time looking at the area and looking at the space, thinking about the opportunity there, and concluded very positively on it. And it's always the combination of, in SuperScale, we think we have a team that is exceptionally well positioned to execute on this, and I think especially in marketing. In the marketing space, a highly, let's say, crafted and very strong product is key, and the founders there come from Patrick was a VP product before, and has sort of like founded also a product centric company before with Mapify, and I think it's these are the things you want to see in the category. But I mean, overall, I think we will see, continued thriving of like these AI workers, and if we some of the workflows you describe, I mean, you can make them so much shorter and quicker with an AI marketing platform like SuperScale, and you can create ads in minutes and UGC in minutes, and you can chat with SuperScale, about the input, about your brand, etc., and it learns all these things and helps you create the right output for it. But in the future, of course, they try to become much more and also become sort of the AI CMO beyond that. And so, I think what we always have to put into perspective of where products are today and where products can be in 18 to 24 months or more when the underlying LLMs have become even better. And I think it will be very powerful.
Just on that then, do you think AI is like just fully democratizing content creation, or do you think it's like more just this is just a next iteration of content creation and influencer marketing? So you say like, you know, in 18, 24 months, where do you think these products will be? Will it be just fully democratized content creation? You will never know what's kind of AI and what's not. Is that what you're saying?
I personally don't have a definitive answer on it. Let's say I'd need to talk to my two colleagues who have been sort of like doing our thesis when they worked on the content creation part for Superscale. But I mean, what is for sure is we will see much. I mean, we're seeing it already. There's charts showing you the percentage of AI generated content on socials, and it will only increase. To what degree, sort of like it needs to be flagged. It needs to be said that it's AI or not. I mean, it's hard to differentiate or hard to enforce that. But we'll see a lot of AI content and democratization probably of it.
Mm-hmm. Now, Peter, we're running out of time, but before we let you go, I really want to ask a couple of questions about your career. You've had a super interesting, very varied career, spending time building and operating a kind of like high growth startup in, I think it was Southeast Asia first, working in big tech at Google, if I'm not mistaken, and also doing a stint at Bain. And then, of course, joining Creandum, building out their office in Germany, rising the ranks very quickly and becoming a partner. If somebody asked you what bit of advice would you give to a young person looking to break into VC, what would you say?
I think it's try to get the mix of analytical and operational experience. I mean, there's different routes into venture. You can be an operator working in a startup. You can be technical. You can be non-technical. Some people come from consulting or banking. And you need to choose which way is right for you. But I think the ideal is if you can actually have, a mix of like analytical skills, potentially technical skills, and then some startup experience. So if I would graduate today, I would probably try to, get a bit of startup experience and see if I can get also analytical or technical experience as well. And, do that for 2-3 years and then break into venture. That's probably how I would do it today.
And once you're in, what's the best way to get to the top?
The best way to the top is like be very, very passionate about it. Like really, if you're very passionate about it, you will read into stuff. You will discuss as much with your friends, with your founders, with colleagues about it. Work thesis driven, and you will then enjoy it. And if you enjoy it, you will also work likely very hard and try to be sort of like the best partner for founders, and B, the one that sees a lot of things and spots new companies and trends early. And so, but it really comes down to passion and sort of like your willingness to really lean into it and spend time with it. And yeah.
Amazing.
Good stuff.
Amazing.
Well, look, Peter, thank you very much for joining us. We've loved having you. Let's stay in touch.
Great to see you.
Thank you very much, Peter.
Cheers, Peter.
Cheers. Wow. That's amazing conversation.
There was so much more we could have spoken about.
I know.
Car on sales, EU.
We missed so much.
EU Act.
It was lovable.
We went deep into Lovable.
We need to stop. We have to stop. every time we're just fantasizing about Lovable.
Well, I think again they did lead. They
did lead. Yeah. Frederick was he's their largest investor today.
But also next guest, Dan Bowyer, another VC in the seed space.
This is going to be a fun one.
So we've got opportunities to talk to go a bit deeper on EU, the EU Act.
Yeah.
And some things going on there.
What time's he coming on? 12?
7 minutes.
7 minutes from now. So I mean, what I'd love to break down some of this Hugging Face robot situation. This is another example of this hardware. Let's get some exposure to hardware.
Yeah.
Right. We saw it with Johnny Ive. We were discussing it earlier as well. Like a lot of these companies now are just thinking, how can I have some exposure? This is a big hard pivot. This isn't like let's just get some exposure. This is literally publicly launching basically 3 robots 2 robots. Well, one has, there's 2 versions available of. So we have the first one, which is the Ricci Mini Lite. That is a no compute unit compatible with Mac, Linux, Windows coming. 2 microphones, wired power only. There's no Wi-Fi or an accelerometer on it. And then the Ricci Mini Full, $449. Raspberry Pi 5 computer included, 4 microphones, Wi-Fi connectivity, battery support, wired and battery, accelerometer as well. These are 2 little cute little robot things.
Little toys.
It looks like a toy.
Yeah.
It looks like
It's just for the tech bros to have a good,
just have a fiddle around.
Exactly.
Just have a play, see what it can do. I'm
and then when they're ready, they go up to Hope JR, right?
well, they graduate. They graduate.
You have to buy that one so you can graduate. Exactly.
And that one is a full size. Obviously, like the Ricci Mini. Okay, it's a cute little thing. It's on your desktop. It's on your desk. It's chilling there. It's next to your coffee mug. It's next to your winning in the US growth book. From Index. Check that out. You guys should go and cop that. The Hope JR is less of a less of like a toy. This is like if I see someone with the Reach Mini, I'm like, okay, they're into it. Bit of tech there. Like obviously, this person's they're into space. If I see someone showing me their like human-sized
proper
robot, I'm like, oh, this person's like, this is their thing.
Product description. So I don't know who said this, but it was like full-size humanoid robot that has 66 actuated degrees of freedom.
That was it. That was
or
the
66 independent movements, including the ability to walk and move its arms. I mean, that is mental.
Yeah,
you can just buy that for $3,000 as well.
That's cheap. That's not. Yeah.
It was that was a article from TechCrunch.
Yeah.
Yeah.
So they're saying this is directly challenging Tesla's Optimus robot, which is like benchmarked at 20 to 30k. I haven't actually. I've seen some clips of that, but this is $3,000, right? Like it's not. It's a big that's a big robot.
And we were talking earlier about Brett Adcock and is it Anduril? It's like
Brett Adcock and Figure.
Yeah, Figure. Yeah. So it's like, moving beyond like LLMs towards kind of like actual physical AI stuff is physical embodiment of stuff, and that's
right.
Is a proper movement, and the big dogs are playing, which is cool.
It was Eric Lando, the CEO we had on Anchor, that gave like an amazing like where is the iPhone moment for AI, but like the physical, like the physical
tech moment for AI.
That's it. He did an amazing deep dive into that as well.
I tell you what, we should get ourselves in front of those robots.
I would love to play around with that. I mean, maybe we should just buy
Next
a Ricci
episode
Mini.
we'll have one. Just
Get a Ricci
behind
Mini.
it.
Yeah.
How much is it?
300.
No, $299. $300. I'm not sure if they ship to the UK.
I'd quite like it. We could put it on the desk.
Yeah.
It could just be like the fourth host.
It's a wave to the guests.
Yeah. Let's get it
That
done.
could be the new intro.
It could be our little like mascot.
And then at some point we'll have Hope JR. We'll have the full size one.
Yeah. That's
hosting with it.
once they sponsor us. That's what I was gonna say. We could have like waving a little.
That would be cool.
Are they for sale now or not?
I think the Ricci Minis are available. I'm not sure if the Hope Junior is available yet.
I'm gonna message them and be like,
Give us one for the show.
give us one for the show.
That's
We'll have it on the table. We'll talk to you about it.
I think that's.
But I think
that's fair.
$3,000 is like, that's just unbelievable. I mean, you could get a high end, so like the Tesla Optimus, $20,000, $30,000, right? And then Unitree, they make one that's 16k. I mean, 3k.
Yeah. Well, so this is part, Hugging Face is an open source platform, right? So it kind of fits into their philosophy, there's an amazing quote from Clement, the CEO, like one of the challenges with robotics is that you can't just build on your own laptop. So you need to have some sort of robotics partner to help in your building, and most people won't be able to buy $70,000 worth of robots. So they've come out, if it's like a super fair point. Yeah, I don't even know why I have to say that. Like that's just like a given. Like most people don't spend $70,000 on robots, but like it does fit into their whole like philosophy of like open source. Like let's make this for everyone. Let's make it accessible.
Yeah.
And VentureBeat are calling it the company's boldest move yet to democratize robotics development and challenge the industry's traditional closed source high cost model. And I think that probably sums it up pretty well.
Yeah.
That's interesting. It'd be interesting to see who jumps on that, gets one for their pod. And I think
we're gonna have to leave.
But how do we buy it? Like, I'm serious.
Can we? Yeah. Hold on. Let me just see.
I'm trying to see if there's like you can like add to basket yet.
Is it Ricci Mini?
Is we just
purchase?
We're just not there yet.
I'm not sure.
I don't know.
No, I think you can get. Maybe it's not available in the UK. There you go. Order light version there. I'm on the Stripe checkout right now. I can buy
Really?
one right now.
Should you do it?
255 quid.
Gosh.
Okay, we should be getting one of these.
So what does it do? Let's get it.
It like you can program it to like it turns its head, it waves at you. Like it's a hobby thing. It's not like I don't think you're like
Right.
That means we
So
need,
what's
we need
the
a, we need a
utility?
technical intern to start coding it for us live in the show.
yeah
for
true.
Sure.
We'll have
We
to
are.
hire some more.
I'm 100%. Let's have one for next week.
Okay, we'll send this clip to Thomas Wolfe. He'll,
Yeah, exactly.
He'll have
Awesome
to engage
stuff.
with us.
Yeah. That's
Okay,
the,
nice.
the
So who's coming on next?
So I think we've got Dan, right? Dan Bowyer.
Bowyer.
This will be a fun
SuperSeed.
one.
This is going to be good.
This is gonna be a fun one.
Yeah, he's got his own podcast, Upside.
Yeah.
That he hosts with I think his co-founder and a couple other guys.
Yeah.
And they go deep, right? It's a really good podcast for going deep onto really specific VC and tech stuff. They talk a lot about EU regulations. They talk a lot about kind of industry-specific news and insights and topics. So we've been watching some of those in preparation. Got some questions for him. Interestingly, on their pod, I think he's often hosting and facilitating a wider conversation. So I think this would be a good opportunity to actually get his opinion or view on some of the things.
Yeah.
So one of the things is like defense tech they were talking about and how that's changing VC and the moral lines, whether they're being kind of redrawn based on the Ukraine war and it being taboo for such a long time.
Yeah.
But interesting, like I didn't get much about what he was saying about it.
Yeah.
And
Well, I know
how
that
it's
he's a strong pacifist.
Yeah.
So
I wanna
Becoming
get-
more mainstream, isn't it? Like defense
100%
tech,
stuff.
you know, it's that and then the marketing side is kind of coming together.
So
and,
that's
like,
what
it's becoming
I'm
almost like-
really because like it has been taboo for a while, right? And I think
Yeah.
that the defense branding is like in most cases, calling it defense is a branding play. Like
100%.
It's offensive tech in most of its cases, but like
Yeah.
no one wants to invest into offensive tech because that doesn't.
Well,
not good, right?
Now they're branding everything as dual use.
dual use. Yeah,
Yeah,
dual
that's
use.
the
Sits in
phrase.
use,
It's like
yeah,
it's
yeah,
like
dual use.
great in times of war, but if you need to switch it and use it in peacetime, it has that.
You can do it as well.
It has
Yeah,
that
yeah.
application. And it was interesting. They were talking about this on Dan's podcast, and one of the people on it was like, "This is nonsense. Like we teach startups to be laser focused on one thing and one thing only. It goes like completely contrary to what you teach everybody.
Yeah.
Don't be dual use. Like no startup should be dual use.
But like,
from the start.
are they even dual use?
Exactly.
Like, are they just saying it?
But
It's like, oh,
Well,
yeah,
that's the problem.
here's an RPG.
Yeah.
It's
You know,
great, but like, yeah, don't worry, you can use it at your son's footy game.
Yeah.
Like, what? How's that
But
gonna
when
work?
we had James on,
case.
and Bolton had recently announced their investment in quantum. What's it called?
Quantum systems.
Quantum Systems, yeah, a big drone company.
Yeah.
James was very much like it's dual use. Like you can
Yeah,
use
yeah,
it
yeah.
for war.
But what I liked about
you can
that-
use it for security and managing properties and all this kind of stuff. And so it does feel like even when you talk about defense investments, people still have to be like
They have to
but it's still
justify
use.
it. Yeah. And
We
you
want
can feel
peace.
it, right?
We want
They have to
peacetime,
justify it.
and we have conviction on this investment in
Yeah.
peacetime as well as wartime.
What I liked about that conversation is like James had gone out into like the field, like not like the front lines or anything, like he'd be
No, literally
in the
field.
UK,
Yeah, like a
in a
football
field, yeah, and was playing around with the tech, which I thought was quite
Yeah.
cool. So like he actually managed to get his hands on the drones and fly them and stuff. But I mean, it's a hobby thing as well, right? Like,
Yeah, no, for sure. I'm skeptical somewhat on the dual use though, because
Yeah,
if
so-
you had conviction on the dual use, it wouldn't have taken a war in Ukraine for you to invest.
yeah.
Right, it's because of the war and what
We
that's
got to
like
ask.
to
We
you
got to
as
ask this
scrutiny.
question.
Yeah.
But
It'd be an
yeah,
interesting one to get Dan's.
But yeah, I
insight
think
on
the
this.
marketing thing is a really cool one. Like how that's changed, and I've got a few questions.
How
on
the
that.
line is like kind of blurring between the two.
Almost like Andrew, like Palmer Lucky, has done. Yeah, I think he's got an amazing background, right? He built Oculus, sold it to Facebook for like $1 billion, and then he stayed. I think he stayed kind of close with Mark. They were going to do some sort of defense contract thing recently. That ended up falling apart. But the Anduril marketing.
Yeah, it's like
It's
anime like style.
It's anime stuff.
Yeah,
It's
it's
weirdly
awesome.
like it's cool. I love it, but it's like.
It's weird, but it's also
This is a shift. This is a
Yeah,
cultural
yeah.
shift.
Yeah.
Like this is appealing to like it's a cartoon. It's a cartoon for children almost. Like,
Yeah.
but it's a cartoon of like these insanely powerful missiles.
weapons. It's crazy.
Which is Then there's a culture shift there. And then there also there was a deep dive into Helsing recently by Sifted. So they got like an inside look into the facility over there. Really keen to jump to that. I think it was Anne Schrader's Sifted put a piece up out there, like an inside look into Helsing. And so, journalists are now being welcomed in for breakfast and coffee.
and they've also got
Crazy.
like aesthetic LinkedIn content. like healthy.
Oh yeah, they're gorgeous. They're
It's
gorgeous.
cool.
It's like
Yeah,
super
yeah.
high graphic. Oh, here's Dan.
Hello.
Hey Dan, how are you?
So sorry to keep you. I was trying
No.
to bite off more than I could chew.
All good, all good. We've got a few things to jump into, but we're just going to get a volume check. I'm not sure if we...
Hello. One,
there
two,
we go.
three.
We got you.
Yeah,
Is
we got
that
you.
shit?
Loud
Can
and
you hear
clear.
me?
Loud and clear. Dan, thanks for joining. How are you?
I'm pretty good. I'm feeling quite old. I'm glad the heat wave is over for the short term, although I'm never going to decry summer in this country. The kids are happy and healthy. Good. How are you guys?
Exactly.
I'd love to hear it. Dan, we've been just sort of going back and forth about a few things. It's so good that you can join us. Could you just give us an intro to who you are? What is SuperSeed? Give us the rundown.
Give us the rundown. Blimey, how far do you want to go back? Dinosaurs.
Let's go as far back as you want.
So ex-founder turned angel turned VC, set up SuperSeed in 2018. Met my now business partner Mads 2016-17, so about roughly 10 years-ish if you squint. And SuperSeed invests in technical founders, very technical teams in the kind of intersection, or where, if you like, where AI meets the real world, so physical AI. And we were doing this pre-ChatGPT and before AI was cool. And so obviously generative is the big new kid on the block, as in of November 22, everything is generative. Oh my God, ChatGPT. But we were always doing machine learning and AI and just really difficult to solve business problems. So two funds, one was our money, then the next was 50 million standard LPGP, and we're about halfway through an 80 million fund doing the same strategy. So very technical teams solving very difficult business problems.
Amazing. And you mentioned you're an ex-founder. It seems like pretty much everybody at SuperSeed, ex-operator, ex-founder. We were looking through some of the jobs that when you've been hiring for VC associates, and you look exclusively for ex-operators and ex-founders. Why is that?
I'm a big believer in, if you've been a founder, you make a better investor. If you've been an investor, you make a better founder. So having sat on both sides of the desk, the penny dropped very early for us. Like, oh my goodness, 90% of European firms, the investment team have never even worked in a startup. That's fine if you're Series A, Series B, Series whatever beyond, and you're looking at spreadsheets and data and numbers, and all you're doing is analysis and crunching. Great, come out of McKinsey, come out of Bain, come out of Goldman's, do whatever. But if you really want to work well with early stage teams, and from either nothing to something, or from something to product market fit and slightly beyond, if you're in that hyper messy stage, Europe needs more founder-focused firms, needs more founder-friendly, founder-centric. And I'm not talking about founder-friendly term sheets and all that kind of stuff. I'm just like people that understand the pushes and pulls and the ups and the downs and all of those. I cannot even understand how you can invest at the earliest stages without having that inside knowledge. It just seems nuts. And obviously the US is the flip. I mean, like 60 to 70% of early stage investors there are ex-founder operators. So it just feels like Europe is missing a trick. So that's why we look for it. So it doesn't need to be, Zuckerberg, unicorn, exiting founders, but you need to have done the hard yards. You need to have done something from nothing to something, operated, gone, oh my goodness, how do I make payroll? How do I build a product? How do I sell? You've got to have that mindset, otherwise you don't fit in the team.
Yeah.
And how hands-on are you with your founders in those very early stages?
I hate that. I mean, I'm so conflicted when I answer this question. So the reality is, at the top level, if you look at the highest performers of anything in the world, sports people, authors, if you look at the highest performing in any sector, space, whatever, they all have support networks. They all have coaches, advisors, mentors, support mechanisms. However, you've got to tread this super fine line between when do you help, when do you get in the way, when do you get on the table, and when do you just let founders get on with it. And sometimes we get it right, sometimes we get it wrong. I'd like to think hopefully most of the time we get it mostly right. But that's the line in the sand. I think you move better with the right people on the bus at the right time, whether that's hiring or selling or strategic thinking or
how to fundraise the subsequent rounds, whatever it is. If you can do marginal gain stuff on a 10 o'clock on a Sunday night and get the right person in the room just to kind of keep the ship roughly pointed in the right direction, I think there is value in value add VC. But I'm slightly conflicted insofar as sometimes you just need to transfer the money and get the F out of the way. So there's two sides to the coin.
And how do you see that? Do you see that in different founders? Okay, this is how I play one founder and almost another. Yeah.
Yeah, and it's a moving feast, isn't it? I mean, that we all have our own inherent skills. All of you will have things that you know you're good at, things that you know you're not so good at, and things that you just don't know. You don't know whether you're good at, or you don't know whether you're bad at. So we are a lens. We're a kind of a reflective mirror, if you like, to kind of reflect back the founder condition, and then also to introduce the right frameworks or processes or strategies or people or products or whatever it might be. And all founders are different, and all founders go through very different things personally and at work over time. So where you were strong, maybe you transitioning from founder to CEO, you're getting out of problem solution mode into product market fit. And that needs a whole new skill set, a different kind of coaching or support or mentorship or whatever it might be. So we are forever changing as founders. We're forever morphing and changing through the lifeline of the business. And so you need different people, things. So everybody's different. There is a lot of pattern matching, as I'm sure I don't need to tell you guys in this industry. But that's what you're always trying to keep an eye out for, is what do you need at a specific moment in time? And is it us or is it somebody else? And working out how to balance that.
Yeah, and one of the things that we wanted to ask about was, as you mentioned, that you were betting big on AI before everybody else was. You raised your second fund before, as you said, it was cool. How has the hype and the market, the kind of the explosion of AI, how has that changed the way that you look at investments, if at all?
The fundamentals are always the same, and the fundamentals have got nothing to do with the tech stack. I mean, I remember when blockchain was a thing, and oh my God, blockchain, whoa! And a minute ago it was something else, and a minute before that it was something else. Like, well, this is like us talking about HTML or CSS or SQL. It's like, I get it, but it's kind of irrelevant. What's relevant is how is the application of these technologies, regardless of what they are, going to change business or a consumer's life or whichever space you operate in. So AI is a massive game changer in two ways. One being, obviously, how we operate as a firm is going to be, and how VC as an industry is going to look in 5-10 years time will be massively different. And so it should be, because VC is a very broken, egocentric, nuts industry. So absolutely should change. And then the kinds of businesses that we invest in, and there's still lots to play for. The news cycle is absorbed with foundational stuff and ChatGPT, or what Jensen Huang's done with his latest chipset. Is he allowed to sell to China or not? So we're talking, the news cycle is very full of stuff that doesn't really touch business just yet. But we are now moving into the application layer. So we've kind of out of data, out of silicon, out of tooling, out of foundationals, and we're now layering in this application layer, which is going to be extremely interesting as how this all affects business and what happens to lawyers and what happens to doctors and what happens to teachers. So this application layer that comes in, I think, is going to be a really, really interesting story that will unfold, and that's happening now. And that we're only 2.5 years into generative AI, really in real money, and this year has been 25. I think has been slightly pivotal. As in, we're now starting to tip into the application layer, and then we're going to start to see how industries are impacted. And investing in those spaces, again, the fundamentals haven't changed, but it's going to be really interesting to see where it's absorbed, where it's not, where it's layered, where it's not. So we don't care sector-wise what we invest in, we just care that it moves the needle for productivity. Because productivity is efficiency, and that means that you can get more done with less. So that's what we invest in. So nothing and everything is the short answer to that question.
That's interesting. I mean, just talking about like hype cycles in general, not that this is a hype cycle, it's more of a reaction to the geopolitical state of the world, but defense tech, Dan, we listened to one of your podcasts the other day. You opened up a conversation saying, and this is a quote, "It appears that Europe has awoken from this slumber to the reality that the world is a dangerous place." Now, we've been talking about this sort of cultural shift. I know that like defense investing was almost a bit taboo in Europe the past few years, and it's only ever since sort of the Ukraine and Russia war that we've actually seen a lot more money being pumped into this. And I think something around now, it's a commitment of 4% of European countries' GDP is maybe going into defense spend. But can we talk about the cultural shift that we're seeing here, and the willingness to invest in these technologies?
Well, some investors can't, right? So some venture capitalists can't invest in kinetics, can't invest in bombs and missiles and defense. But what has happened is an awakening of, oh my goodness, we're on our own. Trump has given us permission to go on our own, and basically Trump has broken the world order and said, look, you guys are not paying your way. We are not going to come and rescue you. NATO is not fit for purpose, and so that has woken the European psyche to go, okay, all right, okay. Massively helping Germany, because what's happening behind the scenes is that all of their automotive plants that have been killed by China, by BYD and the automotive sector in China, are now turning to subs, boats, munitions, drones, whatever. So it's going to rescue Germany, is my take, which is great because we need Germany back in growth. But the broader answer to that question is that defense isn't just bombs and missiles and kinetics and destruction and death and disease. Defense is energy, it's infrastructure, it's automation, it's advanced manufacturing, it's all of the things that civilized society and what Europe is more comfortable being with. It's all of those really, really positive things around food security and different kinds of energy distribution and different transport links. So defense is not what we are banned from investing in, or some investors are banned from we're not, but some investors are. Defense is not that narrow bucket anymore. Defense is broader, and now you'll see the term resilience talked about much more than defense, which I think is fine. It's a little BS-y, but this, I think, will unlock Europe's financial future, and I feel quite passionately about this because defense is effectively sovereign capability. It's the capacity for a country to serve its people. So it's going to knock Europe into shape, and it's going to knock all of the countries within the EU and those of us that are sat outside of the EU into shape. So I think this is an incredibly positive thing from the resilience perspective. But the thought of investing in bombs and munitions and drones and killing people, I will not do that, even though I'm allowed to. And I fight with my team a lot about this. I'm a massive pacifist, but I also want a safe and secure way of life for my kids. And for as long as we have Putin's and Kim Jong-il's and who's the guy in Hungary? What's his name? As long as we got these right-wing effing maniacs, what are we going to do? You need to pony up. I need to suck it up and go, okay, the world is not perfect and it's a absolute mess, and we need to do whatever it takes to protect our way of life. But the positive story in that is that it's a much broader topic than killing people. This is all of the technologies that are going to solve a lot of societal problems are baked into that defense layer.
Just going off that then, so you're saying obviously, yeah, defense isn't just one kind of thing. It's now broadened. And we were talking earlier about how marketing and defense and the line kind of blurring. A question for you would just be can a defense company have outstanding marketing as much as a B2C kind of company? What's your kind of take on that?
No, I mean, it depends. If it's proper defense, then I mean, if you look at, I don't know, Helsing as an example, who knows what Helsing is doing? They have great PR around they're raising shed tons of cash and high-profile investors like Daniel Ek from Spotify and others. But who knows? I mean, nobody knows what they're building, what they're doing, where they're going. There is almost no marketing. There's no public face. There's, it's a monolithic structure. So I think if you are in pure defense, you are not going to be playing those games beyond the magnitude of fundraising. But I don't know if is that answering your question? I don't know if there was something.
No, yeah, I think it's in part to a discussion we had earlier, but we saw the other day, I think one of the first times ever that Anne Schraders from Sifted I'm not sure if invited in, but eventually got in to have an inside look at Helsing. And obviously nothing was discussed in terms of what they're building or what the contracts look like. But there was a funny line from there when the article, she's saying that a journalist has been invited for breakfast to have coffee in a defense tech company, which is interesting. And it stems from, I think, mainly in the US, with Anduril, for example, is another thing that we discussed earlier, but their marketing budget is insane. They have a huge campaign around the US that's don't work at Anduril. And then the don't is graffiti. It's work at Anduril, and then it's don't graffitied on. And it was everywhere. And then they're releasing anime-style cartoon
But is that a recruitment? Was that to get high-quality people?
Exactly. The first one was a high-quality recruitment play. It went viral. Anduril became like the hardcore, when Musk took over X. Everyone wanted, like all the cracked engineers, as they say, wanted to get in there and they wanted to work under him, and they wanted to work 24 hours a day. Anduril, I think, have spun some sort of similar story. Now it's calmed down a bit, but they're releasing for their products, I guess we're going to call them. I think it was like a missile of sorts. It was an anime cartoon style launch video, and it was on Twitter, and everyone was like, "This is so cool." And it just reminded me of some of the stuff we see in B2C. Like a B2C company does an amazing high production cartoon style launch video, and it was the same, but it was for defense. It was for missiles. So this is the cultural shift that I'm finding interesting, and that I'm following a little bit. It sounds like it's not the case in Europe from what you've seen, and I guess I've not seen any other examples in Europe either.
Well, Europe doesn't do much. I mean, Europe is only just waking now. I mean, if you look at Lockheed, BAE, if you look at a lot of the proper primes, they've never behaved like that. There aren't many of them. They are the stock standard. They are part of government. They are inside on the procurement lip. So they will never behave like that. But I think if you did have a recruitment push from a Helsing or from a Lockheed, you will probably get some very clever, we're here but we're not here, don't tell it. I don't know what the campaigns would be, but I get that. But that's not like, we're going to go and kill children and widows and orphans in Gaza. It's not. They're not going to be promoting the thing. They're going to be promoting come and work for the thing or another version. So I get the point solution of the marketing stuff, but I can't believe Europe will ever behave like that, number one, and B, I think it's a very, very heavy point solution rather than a more generic marketing play.
Yeah, that makes sense.
Look, we're running out of time, Dan. There's lots of things that we wanted to talk to you about. EU Inc., Starling Bank. If you've got time, I'd love to ask about Starling. If you've got time, we watched. I think it was a couple of weeks ago. You were talking about the capital markets on Upside and how it was like the worst in, I think, over 25 or 30 years, like worse than the .com.
Years,
what did you make of the news that Starling Bank may end up IPOing in the US?
They have to. They have no choice. I think if you're looking at who are your stakeholders in that conversation, your shareholders, right? I mean, your investors, your future. How can you not follow the money? How can you not go? I think there are some examples where some industries are only known by their local market. They're very few and far between. So you will do a local listing wherever you are, Amsterdam, Paris, Berlin, London. But if you look at the H1 figures for listings in the UK, I think it was 160 million across 5 companies. It's almost like, listen, don't worry, lad. Don't go through the pain of listing and the expense of listing. I'll give you the money. It's almost not worth it. It's embarrassing. And then I think the US in the same time period did, was it 9 or 12 billion? It was 9 billion across 12 deals. We're not even in the same country, let alone postcode, let alone count. I can't even. We are so cosmically apart. So if I was, Shein or whoever they are, they've gone back to Hong Kong. Who was going to list this year? There was a half a dozen or so potential listings that have all pulled and or moved to the States and or relisted in the States. And you have to. You have no, if you are going to, if you have a financial fiduciary investor, you have to do what's right for the company, what's right for your investors.
Yeah, of
and
course.
That at the moment is the US.
And do you think that it'll create good outcomes for these predominantly UK-based tech companies? People like Starling, Monzo, Oak North, they're all talking about looking at US IPOs, but they're all overwhelmingly British companies. Do you think?
But they're trying to go international, aren't they? So they're all trying to launch internationally, and they're all using the PR, because the one thing that's missing from LSE or anything to do with Europe is promotion and PR, and part of the story is encouraging the retail side of this narrative to look at London or Paris or Berlin or Amsterdam or wherever as a viable, I don't want to get too nationalistic about it, but there's an angle to say let's stop, whatever it was, pension funds used to have 50% of their AUM invested in UK something. So UK pension firms had roughly 50%, maybe 15 years ago, actually slightly longer, 20 years ago, in UK something. Publics, private, some kind of like local play. Now it's 5%. And most of their allocation goes to either US publics or US bonds or US something. So we need that. We need the PR side. We need deregulation. We need less red tape. We need the retail. So the two sides of the equation. We need the retail stuff to be positive and some kind of narrative that this is where you list, this is why, this is what we're going to do. Then we need the government to step in and remove some of the heavy regulatory burden. Then we need the stock exchange itself. And I know they're starting this. They need to free float. They need to deregulate. They need not deregulate. They need to just cut some of the structural nonsense that's required to list. And then we need pension funds and investors, the institutions, to start piling back in, because you need government support, you need institutional support, and then the private capital will flow. And then I guess the fourth vector there is getting foreign investment. We desperately need foreign investment. We need the London Stock Exchange to look like a lucrative, positive, energetic place to be. So we need that foreign capital to come in as well. So listen, I don't have any answers. Public markets are not my world, but unless we unlock publics, then private in this country is screwed.
Yeah. It's interesting. We've had so many guests on we've discussed this for a while. It doesn't seem like it's stopping anytime soon, right? This is a recurring theme.
Well, it's getting worse. The momentum is heading in one direction.
It can't get any worse. You can't get any worse than H1 with 160 million. That's Murph a million. Yeah. You can't. We are bottom feeding. Worse than great financial crisis. Worse than .com. Worse. We've never seen anything like this. Yeah. So I think we are flatlined. The only way is up. Reeves is open, Starmer is open, LSE is open, Mansion House is encouraging, but there's a political will and a drive that just doesn't seem to get past the narrative and get past the sound bites. So, and that's going to need some really brave and bold people, private, public, government, institutional, to go, F this, we're not having this anymore. And I think it can be turned around, and I don't think it will take massive amounts of time. We just need to look really attractive. We just need some sex. We need to be zhuzhed and sexed up by some, I don't know who the good PR people are these days, but some sexy PR team to come in and go, right, LSE and regulators and red tape people. Let's give this a positive spin and get out there, because that's what the Americans do so well. It's all sentiment, isn't it?
Yeah.
If you feel like the market's going to do something, you invest. If you feel like the market's not going to do something, you don't. So we need that energetic push at the very, very least, with all of the structural changes.
Yeah. Well, Dan, it's been a pleasure to have you. Thank you so much for coming on.
Lovely to chat, gents.
Thanks, Dan.
Be well.
Thank you very much.
Yeah, let's stay in touch. Thank you so much.
Got to have you back.
See you soon.
Cheers, Dan.
Thanks.
All the best.
Bye.
Wow, that was one of the
Um,
best takes we've had on the whole situation, I think.
Yeah, that clip's going to go viral.
Yeah, that's so good. That's definitely one of the best conversations we've had, one of the best takes. It does seem like it's getting a lot worse, which is...
No, I think he's right though. I think we've now hit rock bottom. But you know, like even last year, there were talks of Shine IPOing, doing like a massive $1 billion IPO in London, and they've stopped. And, you know, Starling last year said that they were going to IPO in London, and now they've said it's not going to happen.
I mean, it was interesting
Monzo,
what he said. He was like, "Yeah, you have to follow the money. Like you have
Yeah,
to.
you have to.
You know,
These founders have the obligation.
They've got a fiduciary duty
to get the most money they possibly can, and it makes perfect sense.
Yeah, I mean, I think it was Martin Mignot that when we were speaking to him about it, he said that like, look, it's not enough for the UK just to say like, no, you have to list it.
Yeah,
Well, like, please,
yeah,
please
yeah,
list
please,
it.
yeah.
Please do that. It's like, well, no.
It'd be great for
like,
iPhone.
like, and it's really related to what Dan was saying. Like this sort of, he even said that I'm not a pro-nationalist or follow the money, but like, there's this whole sort of like national loyalty of like people kind of expecting them to, oh, come on, man. I'm from
Yeah,
the
you're
UK.
British. Yeah.
Like, what's going on, man? Like,
You need to make it lucrative for them.
Yeah, like what? Like,
Yeah.
makes no
We
sense.
need to actually make a
whatsoever.
reason to do it. Yeah.
Makes no sense. What time is the next?
Any minute now.
Yeah.
Any minute now.
Wow.
1 minute. Gianni.
We have Gianni.
There we go. Series C, 70 million.
This is
Interesting.
This is the freshest news we've ever had on the show.
Yeah.
Yeah.
So far.
Like, this is like, the news broke this morning. We've got the CEO on.
Get him on.
Pumped. Shout
And
out
it
to
was
India.
just- yeah,
from
shout out to
Bolton
India.
for hooking this up.
And he announced it literally today, which is
This morning.
Yeah.
Yeah, amazing.
good on him.
Which is very cool. Very hot, very fresh news.
Yeah.
Gianni, Italian founder. Italian ecosystem, I think, is still in its infancy.
Yeah,
Had
I'm
some big
interested to
winners.
see
like
what he says about it.
Depop, I think Depop was like a big Italian exit.
Oh, really?
Yeah.
Didn't know that.
Yeah, I think they're Italian founders.
Also, the Italian founder who, I can't remember, what's the company that owns like Ray-Ban and like Oakley? There's like one company and the founder is Italian. He's like
he must be
self-made. I'll have a look.
Too big for me.
I think it's Bending Spoons. You heard of Bending Spoons?
Oh yeah, what do they do? I see.
They like-
there were loads
they-
of hype around that.
They acquire, I think, struggling tech companies, and they try and make them, and they consolidate them. They bring them into their big stack, and they try and make them like work.
Interesting. There's
There
Gianni.
we go.
Hello, Gianni. How are you?
Hey guys, hi. Thanks for having me. Can you hear me good?
You're
Yeah, we
coming
can hear
through loud and clear. Can you hear us?
Yes, absolutely. Perfect.
Amazing. Look, thank you so much for joining us. Thank you for joining so last minute. And we were just saying that this is the most recent or hot news we've had on the show.
Yeah. Quickest turnaround.
So to give us the news, you've just raised your Series C, right?
Yeah. I mean, we were very happy to be joining our journey by Boulderstone, Lakestar, and Supernova for our Series C. We raised 70 million euros. We are already the largest embedded security company in the world. We are a global company based in Rome. We have offices in Karlsruhe, San Francisco, and Taipei. So we are pretty global on that side. And yes, we basically build cybersecurity for connected systems like cars, like AC systems, like robotics, airplane, and those kind of complex connected systems. We go from your coffee machine to a satellite. That's
range.
the coverage.
What a line.
Our open source solution is right now used on more than 1.5 billion devices on a daily basis. So we are pretty big on that side, and we are very happy to announce this next journey towards becoming an even more global company.
Amazing. And it's phenomenal news. Why don't you tell us a bit about the fundraising process? We saw, and I think in one of the news releases, that the company's grown 450% year over year, which is just phenomenal. Yeah. Given those results, how easy was it to raise the money that you raised?
Look, I don't think easy is the right word to use, because this day time, raising money is never an easy job. Of course, when you have a really strong growth like the one we had, it was more easy approach. I will not say easy, but easier. Let's put it this way. It was a fairly competitive landscape, so we had a very good quality term sheet. We choose to go with Bollerton, Supernova, and Lakestar because they share the vision for us to not becoming only an embedded security company and just sell it to the first chipset manufacturer who will come, but also to work and build on a European champion. As you know, guys, I'm Italian, so I'm pretty into the European ecosystem. I love Europe, and I really think that Europe now should step up the game because for so many years we concentrated our force and energy and capital building fintechs, building marketplace, which is all great, but we need to build fundamental technology. And what we are building here at Exein is building fundamental technology. And we choose those investors because they share the urgency that we feel as a founders and as a Europeans to start building European fundamental technology who can work and be sold worldwide. So the process was smoother than other approaches because of the growth we had. But of course, there are hiccups. There are, pressure, time sheet pressure, due diligence pressures. Also, another important aspect, complex aspect for us, it was a customer reference call because in our market, very rarely customer speaks because we also protect very complex infrastructure, so people are not very easy to speak up. So it took time, for them to get all the information that we built, and also embedded security is something that it's pretty new in the VC space. We are among the 3-4 worldwide embedded security focused company. So also educational process of the investor, it's not a straightforward plan. So because of course they may be seen cybersecurity before, but they never seen embedded cybersecurity, which has also linked to production cycles and everything that is happening on the hardware wise. But I can say that everything went great. It was hard job, but it was worthwhile.
Nice. That's it's really interesting to get the story there. But I'd love to hear how are you going to deploy this capital?
Yeah. So of course, we will use this capital for continuing our market growth mostly. We serve 45% of our revenues come from the APAC area, so Taipei, South Korea, Japan, China, and others. And as you know, selling to those countries has also a cultural effect. It's not only about having a technology, but you need to have also local people who speaks local language and also understand the local politics, corporate politics, especially when you're dealing with Japanese corporate culture, So we need to step up the people there. We need to have pre-sales, post-sales operation. We build, as I said before, we build very complex technology. So this is not something that you just go on our website, you put the credit card in, and you buy a license. It needs to be deployed in millions of devices. So it needs also have a pre-sales, post-sales operation. And it's really important to have this in a local native language that can try to break the language barrier that from Western world to APAC world sometimes there are. And of course, this the capital will be also used to expand our positioning in the United States. We already have a presence in the United States, but we are seeing to enlarge our presence even more, and also to continue the research and development. We are a fundamental technology. We are the most advanced runtime technology across all the border by performance. And in order to be on that spot, we need to continuously attract the best talent worldwide to build this. And we are also very lucky because we are an attractive place for tech talent, even non-European one. So we have people working for us from Asia, North America. So and this capital injection, of course, will help us to be even more structured on that side.
And has a lot of that growth that you've seen come from the US and APAC? Is that where your kind of growth engine is when you look forward?
Look, European economy right now is not in the best shape ever, as you can easily understand. We are very exposed in Germany, and Germany right now has some hiccups. In Europe, the largest embedded market, so the largest country that produce physical devices are Italy and Germany. Okay, I know that many of you guys know Italy as a nice place to do vacation, but Italy is also a very huge industrial powerhouse, especially on the north side of Italy. And that's why we have a lot of production happening here in Italy. Also, Poland is a rising star in this landscape. So Italy and Poland and France are doing very good. Germany, not so much, but we expect a bounce in German economy because of the deployment of the defense budget that the government has issued sometimes, and the rearm EU will most probably also driven an industrial requisite, and of course for us working a lot with industrial manufacture will help us to deploy on that side very much. So we are seeing Asia market as still leading in the next couple of years, but we are also foreseeing a European rebounding, hopefully very soon.
Amazing, winning on all fronts.
Yeah, I wanted to
Hopefully.
talk. I wanted to bring something up. You mentioned that you are certainly global at this point, right? You're selling into countries in Asia. You're based in Europe. You have other sort of European facilities as well, and you actually have talent from these other countries. We had Martin Mignot on from Index Ventures, who discusses this whole thesis of being born global. Something that he thinks a lot of European businesses sometimes struggle with. They struggle with what he calls the mid-sized country trap. When you are expanding to a new country, you mentioned it earlier, you have to have local people. You have to speak the language. You have to have people on the ground, and you have to kind of almost ship some of the early team that you've built internally over there to continue that internal culture. How have you guys managed to do that so well? It seems like you're just flying through this.
Look, I think we were helped by the fact that we were coming from a very underlooked startup environment. Because, of course, if you are born in London, you tend to feel that the world is in London, while it's not. Or if you are born in Munich or Berlin or Paris, you kind of feel that this ecosystem is big enough for your market. We started in Rome, so the Italian ecosystem already is not the best tech ecosystem. It's not the biggest one. It's ramping up, but it's not there yet by size. And we are not even in Milan. We are in Rome, which is even a more underlooked city on that side. So for us, it was essential to think global day one, because we already knew that if we were trying only to sell in Rome or to Italy or to Europe, this will be failing. And in fact, the first license of Exein that we ever sold, we sold in South Korea. So the first sales operation that we did in general. So for us, I think we were out of this mentality cage because we were very, very aware of the ecosystem in which we were born. And on one end, this played out against us because we were very underlooked company. I remember when we announced the Series A, one journalist hashtagged us pizza, which tells you a lot about how Italian company were perceived. So on one end, this played against us, but on the other hand, I think this gave us this. Okay, you need to be global since day one, which if you think it's the same thing happened with the guys in the Baltic countries. If you see startups in Baltics, they know since day one that they will not survive in Baltic, or they know, or the Israeli folks, you don't start a company in Israel because you want to sell to Israel, because Israel is like smaller than one of the region in Italy. So if you want just to sell them, you basically will die very soon. So that's why you are pushed to go abroad, and we had the same approach on that side.
I have to ask, have you sent that journalist your Series C announcement?
Well, I think he's reading it, so I may be planning to send him some pizzas.
That's amazing. That's amazing. This mentioned about sort of like embedded systems.
Yeah.
Can you just break that down for me personally? I'm not incredibly familiar with that in its most detailed format. I'd love to get like an understanding of that and the comparison to the cybersecurity stuff as well.
Yeah, I mean, for embedded system, we refers to basically connected devices, professional connected devices. So imagine something like your smart TV, your smart coffee machine, your car is an embedded system, your ring system at home, your gate, and those are consumer grade embedded systems. Then there are industrial grade connected systems like SCADA systems, PLCs, robotics, industrial machine robotics, all those kind of devices. Or there are also critical infrastructure embedded systems like, temperature sensor in a gas pipe, a lighting in an airport, all those devices that are connected. We started in the military sector. I know now everybody's talking about defense, defense, defense. We started in defense. My background is in defense. And then we moved to the civilian market. We are doing what the other people now, everybody is starting in civilian, now they are moving to defense. We started with defense, we are moving to civilian. So we are contrarian every time. But for answering your question, is basically everything that is surrounding you, which has a connectivity and there's a firmware on top of that, which means a software. It's an embedded component. It's the largest IT market in the space. It's the fastest growing IT market right now.
That's fascinating. That was just going back. When you opened your conversation, when you joined the call, I mean, we are the European technology show. You mentioned that the state of I guess the ecosystem in Europe isn't really where we want it to be. Could you maybe talk a little bit more about how you're feeling about the future of Europe and the technology within that as well?
So I think Europe suffered for two reasons. First and foremost, capital concentration in London was not very beneficial for the European ecosystem, because most of the people managing money in London, they are familiar mostly with the financial services, so they are tending to invest and overinvest in fintechs. And sometimes this could be could go very good, like Revolut or others in that space. But sometimes you have a lot of capital concentration in company that never exit, or they have very poor performance. And I think if you see the UK hugest success in technologies, ARM, which is a deep tech technology company, it's not a fintech, and it's not even in London. So I think one of the biggest problem of Europe as a continent was the huge capital concentration we had in fintech, and especially in the city of London, which is not a geographical problem. Don't get me wrong, but if you are in London, you most probably are an ex-banker. If you are an ex-banker, you're most probably familiar with fintech startups. And if you are familiar with something, you feel more comfortable to do investment in something. And this has created in years a huge capital concentration. And on the second problem that we had in Europe is completely failure of German digitalization plan. Because if your biggest market, Germany is the biggest market in Europe, if the digitalization process doesn't keep up in the biggest market we have, then it's a really big problem for everything. It's like in US, if California was not buying technology, I think this really hurt badly the entire ecosystem, technology ecosystem. I think things are changing. Even in London, people are looking more into deep tech, long value proposition rather than okay, let's give 50 pounds to every customer acquisition. Let's get 20 million customers and let's sell this to a bigger bank and let's go yachting in Greece. Which this was like the playbook that was done. And the guys who did this, kudos to them, but many that didn't make it just lose it a lot of money. Now things are changing because of ARM gave a really nice shakeup about what actually value means when we talk about technology. And what's also Germany now really understand, because of the geopolitical tension with the United States, that digital sovereignty and building and using technology, building Europe for Europeans, it's not an aggressive state, it's just security states, and also the fact that you should use your technology and make sure that you have an internal market in order to your technology to develop and then sell to other people. I'm not somebody who's saying that we should close our market and buy only European technology, because me myself, I'm selling more to foreign countries than European countries. But I really believe that as a European, and even though you guys decided to go out of Europe, I still consider UK Europe, we should step up on the fundamental technology, because this is the underline in which the next generation of a tech entrepreneur will build additional stack of technology. If you look at, for instance, in the United States, you had AWS, then you have the Datadog, then you have Snowflake, and then you have AI using all those technology, So if we don't start to build the fundamental layers, it will be very hard to build on top additional technology layer. And I hope my success as an entrepreneur is say if one day my company will exit and I will maybe change life, I hope some people working in my company building technology will starting their own technology company and build additional deep tech or more even complex technology than the one we built. And this will create this multi-generational stage that we lack right now.
Yeah, build that real ecosystem. And I think you're right. We're seeing that ecosystem exist in those very heavily invested areas like fintech. So it's interesting. What you want to see is more money going into deep tech, hardware, that foundational layer, and also more evenly distributed across Europe and out of these kind of centralized hubs. Is that right?
Yeah, exactly.
Yeah, amazing. Well, look, Gianni, we're out of time. Thank you so much for joining us. We've absolutely loved
Thank you.
speaking with you. And again,
Thank you for having me.
Congratulations on the Series C. It's an amazing news, and we will we'll keep watching. Let's stay in touch.
Thank you. Ciao.
Gianni, ciao. Wow, that was awesome. It seems there's some common themes with this. It's kind of aligned to what Dan was saying as well. It's like, not on our own now, but like, we've got to sort our own stuff out.
This is the point of the ETSL, right?
Yeah. Well, we're here to
front running,
pioneer this machine.
Exactly.
But
by sticking a mic and the camera in there.
But it's interesting when they talk about defence and the GDP commitment by the European countries to spend 5% has such wide ramifications.
Yeah.
Right, like Dan was talking about it restarting the European economy. So was Gianni. Like the implication that has for an Internet of Things tech startup from Italy. And he's saying we're going to see huge growth in Germany as a result of the fact that they're going to massively increase their defence spending. It's just, that one, I think it shows how powerful political commitments can be. That all it takes is like a 5%, well, not all it takes, but they commit to this and all of a sudden it's like, okay, we're going to see a huge wave of massive European tech companies benefit and grow.
But what's interesting is that all the policies and stuff is just so spread across Europe. Like it's not like one, you can't necessarily have one thing, but there's so many different things that you have to get right in Europe to be able to sell to all of Europe.
But that's what's interesting is that like all of NATO committing to 5% of GDP has had such a positive impact on tech
and I hope
the wider economy. But then you look at like EU Inc. and that's, to your point, is like to try and consolidate all the rules and regulations and it's just going nowhere. Right, it's absolutely going nowhere.
Should we chat about that? I mean, we've got kind of like a timeline that we've built out here. When's our next guest? Sorry, that's it?
10 minutes.
10 minutes.
1 o'clock, I think.
Well, so
we got time.
We could go over this. It's just a high level type thing. So the context for this is in sort of 2023, early 2024. We have like founders, VCs, ecosystem leaders across Europe that were getting frustrated at the slow and expensive and fragmented sort of process of scaling companies cross-border in the EU. So big names, like we had is the former Italian Prime Minister, now Special Advisor on EU competitiveness, that was Enrico Letta, and Mario Draghi, former Prime Minister of Italy and former President of the ECB, stressed the need for some sort of like, hey, let's just sort this out. This sucks.
He wrote an amazing report on what needs to happen across Europe to push things forward.
To get
his
ahead.
report is like being the sort of like the centerpiece
for the whole.
like EUAC, EU Inc. Like
Interesting.
he sort of like led the movement to be like, we need to embrace tech, we need to deregulate, we need to make this.
And there's like the
European
generational
environment.
moment, right? Like, this is like potentially Europe's biggest like kind of startup reform in like decades. And this is like
thousands, and like every VC, every founder, entrepreneur has been behind this across Europe.
been a
Thousands and
critical
thousands
time,
of petitions.
Yeah. Well, in 2024, so there was 16,000 founders and investors from top firms and scale-ups like Seedcamp, Index, Personio, Wise, DeepL, signing this open letter calling for like a pan-European legal startup entity. And I didn't even know this, but like in Germany, you have to pay like a notary when you're sort of, I think it's like raising a round.
Yeah.
They have to read out the whole
contract.
It can take like 3 days.
Yeah, they sit in
And
a
you
room,
sit in a room, no one speaks, and one person just
I
reads it
didn't know
out.
that.
And, that's what it is.
and it'll cost you like 50 grand or something.
It's like 50k.
And it'll
Obviously,
cost
like
you,
10.
you raise like a million, 2 million seed round, and you're like, well, like, all right, 5% of it's gone on this notary, and we have to spend like 3 days.
And that's the worst part. Like
it's
50k, yeah, fine. I'll pay 50k out of the 1 mil seed, just to not sit in that room for 3 days.
Yeah, it's the time. Yeah.
I've seen investors talk about it on like X or LinkedIn, be like, if a company is in Germany, it's like, I'm slightly less likely to raise to invest in it because of the admin, because of the cost associated, the time associated. It's just so painful.
But that's like, it's just beating the drum of like the speed over the other side.
Yeah,
in the US. It's just crazy because of all of this policy and admin and
red tape everywhere.
it's
crazy.
Said, right?
I've been seeing an absolute sort of driver of this whole thing, Andreas Klinger. He's the co-initiator of the EU Inc. He's a solo GP at Prototype Capital, and he's also founding CTO of Product Hunt, which I did not know. I thought was really cool.
Oh, that's cool.
So yeah, he sort of co-launched the EU Inc. movement. Super like public about it on X. He's basically like documenting the whole process live there. But throughout sort of January 2025, some more high-level endorsement came. The president of the EU, of the European Commission, Ursula von der Leyen, sort of publicly backed the creation of the 28th regime for startups in a speech at the World Economic Forum in Davos. Then in March 2025, the policy sort of started to get a bit of momentum. The European Council, which is composed of the heads of state of the EU member states, officially calls on the European Commission to propose an optional 28th company law regime for innovation-focused companies. Just sort of getting ahead of ourselves to sort of now, I'm pretty sure they sort of interviewed loads of like legacy players for sort of like legacy. I don't even know if it was tech, just like old businesses in Europe. Like, hey, do you guys like this? And they're all just sort of like, no, that'll like ruin this for us. So then, like,
exactly, they all had like
they have some sort of like political or financial.
all the
or
incumbents, which are like, well, why would we want to make it easier for our competitors?
Yeah,
to compete
exactly.
with us?
Yeah. And it's just like, so everyone who actually signed it and everyone who actually props it up and everyone, you know what I mean? Like, guy who's driving it, CTO, founding member of Product Hunt. That's so cool. It's like, that just like, that's like a microcosmic example of just like what the type of individuals are who want this and supporting this. Like, literally, Product Hunt is about, let's get some light on these cool startups. You know what I mean? That's really, really cool. But
Distribution is key, right?
yeah, and these guys, and like, it's just getting absolutely murked.
And I think they spoke to Stripe, and I think they spoke to like one other tech company or something, and then it was like, yeah, like 92 incumbents or something, and everyone's just like, this is not what we asked for.
Yeah.
At all.
They're all just like, what the fuck?
Like, where's this gone? You know, we all inputted on this, we all like said what we wanted, and then it's just come back and it's like, wow, this is not.
Yeah.
This isn't.
It's done.
This is not at all what we wanted.
Yeah. What a shame.
We'll have to see what happens next. I mean,
it looks like it has
it's expected
legs. It's kind of getting spoken into existence, I think.
Yeah.
But then, I mean, I don't know. Maybe it'll just get shut down.
It's being presented today to the MEPs. And yeah, I think the view is that it could only end up helping family-run businesses. Like, it sounds like the benefits will not be to startups.
Yeah.
And they're discussing it today in Parliament. Everyone's like, this is not what we need. Like, it's so clear what everyone's asking for, right? It's like one entity under EU, so you don't have to have like 27 entities.
Yeah.
Standard option framework for like the vesting and paying of shares and tax. One single registry for all tech companies. So again, you don't have to be registered in like 27 different companies every time you launch to a new market. And none of that's in it.
Damn. That sucks.
We should get someone from EU Inc.
Yeah, absolutely.
Yeah,
Let's
that
get
would
that,
be
Andres.
pretty mad.
2 minutes out from, is it Baptiste coming in at 1?
Yeah.
I'm not
Last
sure.
guess, right?
I'm not,
Yeah,
is it 1:30?
No, it's 1. I think my diary says 1.
Yeah, we're good. Yeah, we're good. He actually just posted on LinkedIn about an hour and a half maybe ago about the amount of people that they're hiring at Fleet. I mean,
Yeah.
it's actually crazy. The list is huge, and it's all over. It's mostly in Paris, which is kind of obvious, and then Barcelona, and it's just crazy how much they're hiring. Head of operations, partnerships lead, events and community manager. They're
He
going.
was like,
They're spreading thin
And Fleet,
quickly.
so they're based in France, right?
Mhm.
They're like a French tech.
Office in Barcelona. And that's it. I think.
he's like an OG there. So he joined like super early. He's led some expansions for them. I think he's led all their expansions to different countries. Sorry. He's also he's like VP of growth and like kind of revenue over there. He's also a founding member of Early Builders, which is like a French community for operators, future founders, place for people who work in startups to sort of get together. And they've been running it for I think it's 2.5 years now. They are crushing it in France. I think they've done some expansion stuff. They've successfully launched in Berlin. I'm pretty sure they have 2 people running Early Builders from Berlin now, kind of like franchise it, I guess, in a way. To Berlin, which is really cool. But in France they're massive. They get some really cool. They had JC down. They had the director of Station F down.
It'd be cool to ask him about how being an operator at Fleet, but then also being this community builder. What
the overlay
Early
is.
Builders, how that changes what he thinks about kind of what he's building.
Yeah,
and his kind of direct actions with that.
I feel like France is so good for communities.
Yeah.
Like there's so many. Like we had a deal on last week or 2 weeks ago talking about Anomaly Space.
He gets guys like all the time.
Yeah.
Dude, I still can't get over that
Station
it's got
F,
Gareth Bale.
Station
on
F.
It's really funny. That was actually so funny. I was like, Steve Jobs, and who's that next to you? He's like, Gareth Bale. I was laughing so much.
Yeah.
But no, you're absolutely right. Yeah, the scene is buzzing there, and it comes back to that whole thing about this. I mean, Dan mentioned it earlier in a slightly different context, but the joy and the hype and it's cross-functional there. Like the government is so bullish on their own tech sphere. Like they have a thing that's like the French Tech Next 40.
Yeah.
And it's like the next French companies to maybe IPO. Macron gets involved at every opportunity. Yeah, there's a running joke for these sort of Series B plus SaaS companies in France. Who's on stage with this, getting a selfie with Macron this time?
Yeah,
because they're all doing it. Because Macron's
he's up for it. He loves it.
Loves it, and it's such a great thing to do. I know that we have the sort of 10 Downing Street AI dinner. Which is just such a British spin on it. Let's all go for dinner.
Peter Carl is the Peter Carl, the minister for tech in the UK. I think people like him. I think he was criticised for being too close to big tech, but he's super bullish. He was down at the Synthesia offices when they opened it.
That was cool.
He's very pro tech, very pro the ecosystem, and I think he should be, and he is to an extent, but playing a bigger role. Doing that sort of stuff that Macron is doing.
Agree.
I think
100%.
He's one of the top guests that I want to get on.
Yeah,
Peter Carl. He's the Secretary of State for Science, Innovation and Technology. I think we'll get him.
No, that would be great. Yeah, we should get some people for
This is the call out for him.
Yeah, come on.
Right now.
Yeah, we need to point the camera.
I've been sending messages. I've been cold messaging a lot of people.
Well, you've been hitting the outbound trenches.
I hit outbound all day, every day.
I love that.
You're outbound monster.
You absolutely just have to ping people relentlessly.
Yeah.
People in government, they don't reply to me.
Yeah, what's the outbound strategy there? Baptiste, what's going on?
Hey, my guys.
What's up? Welcome to the European Technology Show. It's a pleasure to have you here. We've got me, Seb, and Luke. Baptiste, you're on a bit of a tear recently. Jumping straight into it, could you give us an intro to who you are, what do you do, and then a 1 minute pitch on Fleet and a 1 minute pitch on Early Builders as well? Go.
Yeah, sure. Cool. Nice to meet you all. Yes, I'm VP Growth at Fleet. I joined the company 4 years and a half ago. And on top of that, I also co-founded like Early Builders. Yeah, that's basically what I do.
And talk to us about Fleet specifically. What does Fleet do? What is what is the premise with Fleet?
Yeah, sure. So Fleet, what we do is that we help SMBs and scale-up startup to scale their IT management. We're a bootstrap company. We're doing more or less like 25 million revenue with a good EBITDA with 40 people. So we don't have like the revenue per employee of AI startup, but I think we like good and lean startup, growing a lot. We grew by 60% last year. We're gonna grow like by 100% this year probably. We're doing 70% percentage of our revenue coming from international markets. So yeah, we're growing, but by staying lean. And Early Builders, basically, it's a community of early employees to help them navigate through their journeys in early stage startup. So we all know that those kind of Swiss knife, you need to juggle between a lot of different responsibilities. And the idea is that we start in Paris, gathering people from top startup. We're around 100 people more or less now. And now we recently, like 6 months ago, expanded to Berlin. And we're about to expand to London in Q4. And yeah, that's a quick pitch about Fleet and Early Builder.
Awesome stuff. Awesome, man. I know that. So you just mentioned like the growth with. We'll do Fleet first. I really want to get into Early Builders as well, but just on Fleet first. The growth at Fleet has been pretty crazy the past sort of year. I saw a comment you made. You were really early at Fleet. You were like super. What employee number were you? You were like right at the start.
I think I'm the oldest employee in the company right now.
Okay, wow. So yeah, super early. I think it was a comment from you or maybe your founder. Sort of laughing and joking around where like someone had asked about the growth the past year and you'd said like we had to go through a few years of nothing like what we're seeing right now. Could you talk us through that journey, how it feels now to actually see that kind of hockey stick, I guess you could say?
Yeah, I think the point is that growth is not linear, We initially start in France, we grow quite a lot. Especially because one of the data points that we have looked at quickly is the number of hiring, so the number of equipment needed. So, within the startup bubble in 2021, we grew like crazy. And then we stay a bit flat because the startup market went back to normal standard, I would say. And then we expand to new markets, Spain, Germany, UK, currently the US and other markets as well. And now we're seeing, all the hard work that we did during those flat times paying off. So yeah, it's super exciting. But the point here is that you cannot expect to grow, by X% always. Sometimes it's more like, you have some growth phase, and then you need to build, consolidate your team, make strong choices, sometimes meaning firing people. And then you saw the results sometimes paying off a bit later. So the point behind is, sometimes it's not about the short term, it's more about like medium and long term. But when you do the right choice, you see the result paying off later, and that's what we are seeing now. So it's quite exciting.
Amazing,
exciting stuff.
Amazing.
Should we move on to Early Builders?
Yeah. Let's
questions.
Yeah, I'd love to. Early Builders then. So I mean, you guys had a crazy 2024. Which is, I'm looking at what we've got down. It's like 120 plus active members from startups like Mistral, Pivot, Dust, 600 plus applications from early operators across Europe. Launched Germany. You've got 2 affiliates working in Germany under the Early Builders brand. You've had over 5 public events, all sold out. Speakers from Payfit, Trade Republic, Anchor Store, Swan, Spendesk, Gorillas, Forto. 10 expert workshops on partnerships, inbound recruiting, 300 plus subscribers, director of Station F, JC from 20VC, and an expansion coming to London. How have you managed to do all of this? Like, what's your team set up? Because you're juggling 2 jobs.
Yeah, it's a good point. I think the idea is just about hustling. and what do
Yeah,
you want
nice.
to do
Good
with your
answer.
life. And I think it's an initiative at a personal level and with other founding members that help us to, day to day, I would say, like if I take Fleet, we expand quite a lot into new markets, and help early builders help me with that. Doing some partnership, closing some client as well, etc. It helped me also to build a network, I would say. Meeting like tier one people, tier one speakers, etc. So I would say, it's just about what you want to do with your life. Do you want to do only like classical employee job, or do you want to go beyond that? And in terms also of intellectual curiosity, I would say I'm learning a lot because of that. In terms of new ideas, in terms of inspiring people. For example, we did the biggest event so far in La Maison de l'IA from Lafayette family 2 weeks ago. There was Julien Cordonniou from 20VC, Roxane Varza, super inspiring people. And as I said before, it's those kinds of initiatives also help you to meet those kind of people. At some point, if I build my company, I'm already in the radar. I know them a bit, so for sure it helped me. And then the topic is just how you find the time. But I mean, if you want to hustle, if you want to grow as a person, you find you find the balance.
Nice.
Amazing. And what's the future for early builders? We're quite friendly with the builders and operators team. We had Adil from Anomaly Space. And it feels like everybody, who's building these communities has somewhere that they want to take it, potentially investing in some of the companies that get spun out of it. Is that what you're thinking?
I think the main point we want to focus on and what we are not seeing that much in so many communities is quality. When you build such initiative, you can be tempted to open the community quite a lot of people, but not be selective. And we want a community, so it's basically build around a WhatsApp, and then we run community-only event, public event for public. And we want in the community only tier one people, because we believe that when you start meeting like people like tier 2, tier 3 people don't get most out of it, so we want to be super selective in the people we add to the community, meaning like gathering all the early operators in Paris, from the top early stage startup backed by the top VC, same in Berlin. And this is the feedback we are receiving, we are highly selective in terms of people we add, we are highly selective in terms of speakers, and the idea is to basically build a community that help early operators navigate their journey in Europe. And you're talking about other initiatives, probably operators and friends. I mean, our purpose is not to then have some deal flows and invest in those companies. I would say it's just more to expand in Europe and help people also gather together. We saw like some people coming from Germany in our last event in Paris. Globally it's more to build a pan-European community, focus around quality, and to grow as operators and probably later on as a founder.
Amazing.
Can you walk us through the expansion to London then? You mentioned that you guys wanted to open, I guess, like a hub or start running events over here. Like, how would that work? How would that look?
Yeah. So I think two things. First, we're going to open the community to London in Q4 with our first event. We will have the first employee of Revolut, Alan Chang, and the first employee of N26, Alex Weber, so that they can give us a bit about their journey, just to run a flagship event. And then once we create a bit that brand, attract the first profile, the idea is that we run the community through batch. So every 6 months, we have a new batch. We had like 20 to 30 people. We're highly selective. And then, we increase the community every 6 months. So yeah, I would say the idea is to run a first big event, to raise the early builders flag, and then create a first batch, super selective, super specific around like early employees. And yeah, it's quite exciting.
Nice.
Very exciting.
Very cool. You keep mentioning sort of this selective process that that would allow me, for example, to come into the early builders community. For those listening, a lot of our audience is based in London that would probably love to be in the early builders community. What are the signs you're looking for? Right? How do I get into the early builders community?
I think, yeah, two things. First, how do you get into it is like we have basically a form where you can fill your info, or you can just reach out directly. Happy to have a quick chat about it. And then the second point is how we select those people. I think we are especially looking for people that are quite early in their company journey, meaning if you are employees number 50, you don't have the same challenge, So we especially want the people in the community that, are usually before employee number 10, number 15, because they have the same problematics, I don't know, if you are at employee 50, you're probably gonna build a team, scale a team from, 5 million AR to 15. Now, usually the challenge are more early than that in the community. And then how selective we are. We do classical VC, I would say, background check. We check the company they are working for, the VC they back them. We essentially select the people based on those data points.
Insane. Very, very cool.
And you can apply now, right? Can you apply for it?
Yeah,
now?
for sure. The idea is that we're gonna open the community in Q4, but for sure we start to have some discussion with several people right now, and add them later to the first batch. So for sure.
And is it specific to sort of like operational and generalist roles, or is it anyone from any department, product engineering? What are you looking for?
It's a good point. I think initially I would say 80 to 90% of the people we have in the different batch are like a generalist profile, and we are opening more and more the community to more like product and techie profile. So to be honest, we are open to add everyone to the community. I think perhaps just the point is that the challenge that we are seeing on a day-to-day of the community, on the workshop we are running, a bit not super focused on product and tech, but this is something we want to evolve a bit and change a bit in the coming months.
So that sort of typical profile, you have like chief of staffs, founders associates, that type of like, as you said, Swiss Army knife thing.
Operation, this kind of stuff.
Yeah. And it was always, when we were doing Embark, it was always super hard. It sounds like you guys want to push into a more, how do we increase the technical scope of members here, right? And it was always a really hard thing. I think our community was maybe 70-30, 80-20, commercial, chief of staff, founders associate, early ops, to like a 20 sort of founding engineer type, right? It was always a hard thing to balance. I'd love to hear like, early employee for you. You've been an early employee at Fleet. You speak to all, over 160 early employees at Early Builders. What is that early employee role? What is that chief of staff, that founders associate, that first, second hire? And why should more people in the space be looking for it?
Yeah, it's a good point. I think I will start with your second question. For me, it has been the most rewarding job ever. I think you learn to do a bit of everything. You learn first how to hire people, how to sell, how a P&L is composed, what's the margin, how to run like within difficult times, how to motivate yourself on a regular basis also, because you are quite autonomous, you have a lot of responsibilities. Sometimes it's not easy, but I think it's by doing the hard things that you learn a lot. And then what's the typical early employee? I would say it's someone that is super curious, that is that is used to take some risk, that takes some new ownership. He's not afraid of failing sometimes, learning also, because we say learning by doing, but sometimes you fail, and someone that is super autonomous, that is, I think the main word is ownership. You take a problem, you solve it, you go to the end of that, and then you learn by taking new ownership, growing, perhaps at some point having a team, etc. So I would say it's a bit like a founder bis, I'm seeing like a lot of people that sometimes see their job just as employee. I think us as an early employee, we see more than that. We want to push the company quite far. And this is something similar to a founder. You know, you want the company to grow, to attract the best talent, to close the best logo, and you care a lot with the company. And I think that's essentially what an early employee is.
And do you think it's a great training ground to go on and be a founder?
Excellent question. I think it's because, as I said before, you learn to do a lot. I think it's the case when you're working with excellent founders, because you have so many companies right now, and I think the thing that make the difference is like how good is your founder. You know, if you learn with tier 2 people, I believe that you will learn to be a tier 2 person. So I would say it's the best way to be a founder later if you learn close by, an excellent person. However, the downside is that sometimes you don't go super in depth into, like one specific area, one specific department, such as, products. So there is a lot of positive side, but it has some downside. So yeah, I would say at some point, if you believe that you are more like a techie or product guys because you have the skills, I think that people should not be afraid of evolve towards owning a specific department, But if you believe that you are someone generally super curious that is ready to work on a lot of different topics, yeah, having that scope is the right thing to be later on a founder. Yeah.
Yeah, I think it's one of the things that isn't really spoken about, but I think one of the hardest things I imagine about joining as a really, really early employee. I joined as the 30th employee at the first startup I joined. But you have to have all the skills of an amazing VC to be able to pick a winner, right? To pick the tier 1 founders. VCs get to make 10, 20 bets a year, and they hope that one of them is right. They hope they pick one amazing company. If you're an early builder, an early employee, you get to pick once every 2, 3, 4 years, and you've got to really hope that works out, because if it does, and you're like the first employee at Revolut, it's going to be game changing, absolutely life changing for you. I think one of the really interesting things is both about equipping and enabling young operators and builders on how to try and pick winners, and then secondly, it's when do you accept or call it a day. So if you've been building a company for a year, 2 years, 3 years, 4 years, at what point do you need to realize that this isn't going to be a rocket ship? And at what point do you need to try and find the next thing to go to try and accelerate your career? I think those are the hard things of being like a
tough question,
an early operator.
Yeah, totally agree. I think it's essentially a bet, I would say, on the character of your founder. And if we go back to our initial question, which was when we ran, difficult times, I knew that my founder were excellent because of several things. Also, it's a bit of gut, and I knew that at some point we would find a solution. It doesn't mean that I was always like 100% confident. It would be lying saying that, but it's more like, yeah, at some point I understand the difference between a good founder and an excellent one. So I trust them. And when you trust people, even if sometimes it's not like growing like a lot, you trust that you will find a solution together. But I think it's some question that you should ask yourself quite quickly, If you're not growing for 2 years and you didn't ask yourself the question and you just want to keep pushing because you want to keep pushing, doesn't make sense, So yeah, I think it's more like, do you believe in your founder? And you should ask yourself the question quite early.
Yeah, you've got to have conviction. And I guess like VCs would say the same thing. But look, I think we're out of time, Baptiste.
Fresh out of luck, fresh out of time.
But look, if we can be involved or help at all with your London launch, let us know, because obviously I don't think any of us are early enough to join the community. But we have a platform and an audience of a lot of people building in a lot of cool UK companies. So if we can help at all, just let us know, and we would love to. To see it be a success. Yeah. We love what you're doing.
Let's get you back on for a recap of the first event as well.
Yeah.
Just
With
before,
pleasure.
maybe just after.
With pleasure, guys.
Awesome. All right, dude.
See you. Cheers.
Cheers.
Thanks a
man.
lot, guys.
Thanks.
See you.
Bye.
Very cool. I love that question. The
Yeah, that was
You know,
interesting.
when do you call it a day?
I feel like
I never thought about
I've never. I mean,
why
like, I've had thoughts in my brain about like when the hell am I going to call this a day? But like, I've never thought to be like, I've never actually like
to
pondered
actually
over
think
that.
think
Yeah,
about
yeah,
it like a VC.
Well, when
do you
do
know
you
what I mean?
call it?
That's so true.
yeah, so I mean, it's VC, like I said, like VCs
not
get
vocalising that.
so many.
No way.
They get so many swings of the bat, and they get so much more data and insight. You know, they'll get customer referrals. They'll see all of their data and all their financial
yeah,
results.
yeah.
As an employee,
Get an interview with the founder.
yeah, as an employee, you get to like ask a couple questions, but they're assessing you.
Yeah.
So
Yeah.
you know,
Yeah.
there's a real.
But also, yeah, and
Interesting
you can't,
dynamic.
like from experience, right? Like I was at Convergence super early. When we got acquired, we were only 26 people, and I think when I spoke to the guys, there was only 3 of them. There's 2 founders and the head of product. But like even at Pigment, I joined in their UK office. There was only like 8 or 9 people there when I
Yeah,
joined. They
really
were like
cool,
90 globally, but like. And there was never really like, you know, Convergence, it was tough. It was pre-seed, it was super tough. At Pigment, it was a bit more chill. It was like Series A, we had PMF, I was just like scaling crazy. But like there is on both, you don't want to be the person that's kind of like,
That keeps missing out.
or like, well, yeah, that, but like, you don't want to be the person that's like, hey guys, is this working? Like, you don't want to be the doubtful Thomas,
Yeah,
as they
yeah,
say
yeah,
in
yeah.
the UK.
You do, yeah, and once people start to get that mentality,
It's infectious.
like
Yeah, exactly. It's
wildfire,
infectious.
right? Yeah.
It compounds and it becomes a really negative vibe in the company.
Yeah.
So I think it's really interesting that he talks about like having real belief in the founders and how important that role is. And if you can
Like
get
serious
behind them,
conviction,
even when things are going badly, but if you still back the founders, you're like, well, I'll see this through. Even for him, he's saying a year or 2 of no growth at all.
Yeah.
But
Like Baptiste was early with Alex,
Yeah.
the founder. Alex is cracks, to be fair, just like a load of.
And I think that's just like it's an amazing testament of the founder.
Yeah.
And you can keep and retain your whole team even through those really tough times
Yeah.
because they just like back you.
But it's so interesting that he's building a community for the people that are experiencing, like for
Yeah.
a lot of them as well.
So I didn't know it was
It's
like
so
that. I didn't know it was. I thought it was just like.
I didn't realize it was so
Like the first employee type
Yeah,
vibe.
yeah,
I
yeah,
thought it was just like, you know, like operators and friends, like
Yeah.
Bart,
Yeah,
but
But super
just a
early,
community.
Freight.
But I think it's clever though to
Yeah.
actually
I
niche
think it's
down
really
because
cool.
then their whole team can actually like help in a very specific way.
Yeah.
And
But
So
also
you're all experts,
But I'm
right?
I'm
Yeah.
curious to see where they're going to take it because
100%. Yeah.
Operator and Friends, they do invest. They've got money. You know, they're Andreessen scouts.
Yeah, they're scouts.
You didn't
for
seem too
A16.
interested in that.
But that seems like an absolute golden opportunity.
True.
You've got
Yeah.
the earliest operators
Yeah.
at the biggest tech companies across Europe. He's saying that it's a great training ground for future founders.
Yeah.
Like,
People are going to be spinning out. People are going to be spinning out.
100%. People will be meeting each other, founding businesses.
I should have asked more about like founders kind of meeting each other in there, like almost like speed dating founders.
Yeah, like what's going on.
And do people just spin out of their like
Yeah.
early builder companies?
We had a couple at Embark. One of the biggest ones
100%,
was
community, right?
was Coform. Nick Joncliffe doing like an amazing job with his co-founder. It was heartfelt that they led I think it was like a mil or a mil and a half pre-seed, but he met his co-founder at an Embark event.
Yeah, amazing.
And then, you know, this is obviously like crazy. Like for us, it was like
That's awesome.
market the shit out of this.
Yeah.
That's how you know it's going well. Yeah.
But yeah, no, really interesting to hear that he's not interested in that take. We haven't discussed 2 things. Really wanted to discuss is the 11 Labs and North Zone investment in Murphy, and also the ex-Sequoia partner closing this 400 million European tech fund. Which one?
Let's start with 11 Labs.
Okay. So this is interesting. This is really interesting.
Yeah. Let's do a breakdown. A Spanish startup called Murphy. It's just raised $50 million to replace human debt collectors with AI agents. I mean, one quick just thing about the vision of the kind of company. I mean, the CEO obviously has like a good kind of quote. She literally just says, "We're building AI native infrastructure that replaces traditional call centers with a scalable, multilingual solution. It helps companies recover more faster and more cost efficiently while staying compliant and treating debtors with respect." It's cool.
It's really cool, and I think it's like, firstly, stepping away from Murphy specifically. What really fascinated me within this is like 11 Labs is investing.
Crazy.
They're a Series C company, and they're investing. Like traditionally, you know, the corporate venture model is a thing. It's a real thing. It makes a lot of sense, right? Like you've got a large entity that's, you know, usually worth a few billion, like more than that, really. Like legitimately.
Normally they're like huge incumbents. They're like the big insurance.
Yeah, like they have like billions of revenue.
Yeah. They're investing their own money.
Yeah, and it's like it's like a top of funnel play. It's like, where can we plug some inefficiency gaps that we have? Where can we make some smart bets for the future?
Yeah.
Where can we experiment in certain industries? Where can we experiment with new tech?
Potentially, acquire the company down the line. Yeah, strategic bets.
Really cool, love it. But like, I just feel that like in the last sort of, I don't know, maybe year and a half, whether it's like tech events, whether it's like the AI stuff, whether it's like the geopolitical state of the world, like we're getting like time is like compressing. Everything is getting quicker
from years
and shorter,
to like months.
and it's gone from like $1 billion revenue to like Series C, and you can just start like chucking some of that cash.
I don't understand how they can do it, because they're investing their investors' money.
Yeah. Well, look, maybe they're like, I'm not sure what their revenue figures are, but like,
I don't think they can be.
Can't be enough to.
They can't be making so much profit.
It wasn't like crazy. It was like I think they came in. They followed in, and it was like 5 mil total.
Yeah. No, I think they raised.
Oh no, sorry, it was 15 mil.
Yeah, they raised like 10 or 15,
Yeah,
and I think maybe they I don't know. I'm making this up, but they didn't leave the round, so maybe they chucked in and they'll 2 mil, whatever. But it's not their money. I don't understand it. And if in the venture game you've got to make a lot of bets in the hope that one of them pays off.
Yeah.
So if they're willing to make a bet like this, and obviously this is in a very similar space to them. So I understand it strategically.
That's why I like it.
But it's like, how many of these are they going to do? Are they just going to make one bet and hope that pays off? Or are they going to have to do like 5 or 10 of these? How much money? How much
They
of
just
their
get to
capital?
experiment, right?
Well, that's the thing.
Yeah.
Like,
crazy, but
they're experimenting because I think it's call centers, right? They're like, and these guys are text to voice.
Yeah,
like, it's some sort of voice play. I like it.
Maybe they're using their product or something.
Maybe 11 Labs just.
It's also like
products
such
in
an
there.
interest. Voice AI is such an interesting.
There,
space.
so I went to there. I should have worn my. I've got loads of 11 Labs merch.
Put it on.
Yeah, shout out to Marissa for the invite. She's like one of the GTM leads there. She invited me to it's like a private launch party actually. Matty, one of their co-founders, was there and basically announcing they've already announced it now, so it's still public. But it was their V3 model, this new voice model that they built, and it was kind of crazy. It was like. You can sort of put like inflection points on it. It will kind of read when you're asking a question. You can just like really smash emotion into it. And it was actually really really cool. They had some really cool people there. Casper Lee was there. It was quite funny. Casper Lee was actually like downloading the app, and I think when you open the app, it makes like a noise. It says like, I don't know, it has some like voice notes like welcome or something like that.
Yeah.
And they mentioned like, okay, you guys should download the app, and everyone was silent just watching the talk, and it was like super silent room. Casper Lee downloaded the app, and it was like welcome. And he was like, sorry, I'm downloading the app. Everyone turned around and like, it was quite funny.
Super interesting, and they raised 180 million, right? And so they're obviously. I wonder how much of that they're going to be allocating to bets like this, but I guess it's still going to be a relatively small size.
Just one more thing that I've got. I just thought this was like kind of funny. The CEO, so his second name is Sol. What's his first name? Is Borja Sol. I'm not sure too much about the background of the individual, but something I just thought was quite funny was like there's a quote in the article. So I mean, like the whole premise was like, job displacement is a reality. Like people in the call centers, they might get replaced by this, and like there was a quote in the article that said like, oh yeah, but it's not really fulfilling work.
Yeah.
So just get rid of it. It's like we're making lives better in that sense, because at the end of the day, nobody wants to be dealing with collecting money and having to push people that cannot pay. I just saw this. I was just like, in the whole sort of like AI's coming for your job. AI.
He just is like so blasé about it.
People are freaking out about that. By the way, like people are.
He's like, just get it. Yeah, he's like, I'm doing you a favor.
Yeah, he's like, just getting you on. Right? Like, no one likes that job.
Why are you doing this job anyway?
Yeah, kind of messed up, kind of funny.
It's like an interesting take.
Just thinking like his PR team is probably just like, yeah, thought that was funny. But no,
and then the Sequoia partner.
This is nuts.
Matt Miller, ex-Sequoia partner, raising a solo GP fund. And I think he was targeting initially, like 200 million. I remember reading about it like 3 months ago, 6 months ago, something like that. I think he was targeting 200 million. Maybe I've got that wrong.
But it will make him one of the largest, I think, the largest VC firm based in Europe, run by a single venture
Solo
capitalist.
GP.
And I'm sure he won't be running it by himself for long.
No,
I think he's got
but-
committed 350. He wants to close 400.
Yeah, he's got like a couple more mils to go. But reading the FT articles, Matt Miller has been raising money from institutional investors in recent months, according to people familiar with the move, seeking to become one of the best funded solo investors focused on backing European tech startups. He has already secured at least 355 million from institutional investors. How much clout have you got to have to do that on your own?
Yeah.
Like, do you know what I mean? Like that's
Yeah, you're waking up in the morning and you think,
I don't think I could go like a gram together.
Yeah. But I think he was the guy that brought Sequoia to Europe. I think.
Yeah, he spearheaded Sequoia's
yeah,
expansion
yeah,
into
yeah.
Europe, helping open the firm's London office in 2020. He announced he would leave Sequoia last year after being embroiled in the boardroom battle at Klarna.
Yeah, with Michael Morris.
With Michael
Yeah,
Morris,
this is
by the
interesting.
way. Who is getting in a battle with Michael Morris?
Yeah.
Like the legend Michael Morris.
Yeah, but then
like, early
you literally
Apple.
just said that this guy is like, he's cracked. He's raising 300
Oh, yeah, obviously.
$400 million on his own. This is the guy that got against it.
Yeah, no, fair
Yeah.
play. Insane.
I love it that it's like European focused, right? Like European
Really cool.
fund.
Yeah, I think
really
it's cool.
Well, he says it's like it's going to be Series B plus. It's going to be growth investments, and the strategy is to tap into this surge of promising European scale-ups, especially in AI. And you look at sort of like the Scandinavian area, it's absolutely blowing up.
Yeah.
There are just countless examples popping up out of everywhere.
But I think it must be so tough right now because so many GPs are struggling to raise funds. Like first-time GPs are really struggling to get commitments and raise their first, second round from LPs. And this guy just comes along and raises 400 million.
Yeah.
Like most GPs are struggling to make like 10 million.
You've just
to
got-
raise a 10 million fund. And
Almost
I
like
feel
the
like
classic solo GP like story of like, you're going to have the hard like 5 years or whatever. And then that's when, you're not taking pay cut, you're not taking pay or whatever, to actually raise the money. Is
And he's
just
I think
smashed it out of the park.
because of the Sequoia brand.
Yeah.
He's able to leverage that. And
Yeah. Well, they're LPs as well.
Are they?
So they had a big bust up in the boardroom.
But they're also like
He's
gonna
so
invest it.
cracked. He's like,
and he's managed to swing with his
"Please
LPs.
take some of our money as well.
Respect.
This guy. Yeah, some of his previous investments: Confluent, GraphCore, DBT Labs, Grafana, NAN, Hex, just to name a few. But
We haven't actually named the entity that he's raising from.
Please.
Is Avantic Capital.
Yeah.
So search them up.
Capital.
Probably give them a follow because I'm sure
Are
they'll
they-
be doing
are
some
they-
good stuff.
like
If you're looking to raise money,
yeah.
you know who to hit up. They've got
The
they got, like,
inbound from
social,
Avantic
got
Capital
fresh
is gonna
powder.
Yeah, that is.
They do.
That's crazy.
400 million.
That's crazy. And then something. I mean, we kind of touched on it earlier, but like this plugged thing,
Let's
kind of
do
a
it.
found a finite
Yeah,
thing.
this is cool.
Kind of want to get like a video of that. So it's coming up. I've not got any notes on it, but like I just saw it the other day on LinkedIn. I think it was. If you search plugged.
Have you seen the poster for it?
No, what was it? Oh, that's hilarious.
Is
So
that
it
not
is like a
awesome?
fight.
I mean, I don't know if you guys can see that, but
That's
that's pretty wicked.
So
We'll get
it's
it
a fight
up
then?
on the screen.
It's a
one
fight then. I'd love to. Yeah, I mean, I connected with a few of them on LinkedIn just to sort of.
I just think it's just so good that
Who's running this? Do we know?
No,
Tech games.
it's a group of 5 people. They did like a Friends style. We're on the couch and we're doing like a Friends intro style.
oh yeah.
Launch video type thing.
I love the who's coming.
Picture it to look.
Who's coming? Cracked founders from early stage to exit. Tier 1 investors, top operators. Cracked founders.
So weird, bro.
So weird.
I mean, it's cool. I mean, it's it's not
Growth
like
co-loop,
when
pricing
we think
company.
about like putting EU back on the map. I didn't have
Yeah, this
tried
is nuts.
hand-to-hand combat in someone's garden.
I don't
But
get it. I do not get it.
I think it's but no, I think it's trying to get the. I think it's trying to do like the. We can do these cool networking events. It doesn't have to be we're in like a cafe or we're in just
a VC office.
Yeah,
who's like,
yeah. Which is it's weird. Don't get me wrong, but it's like we said earlier with that. The thing in SF with I can't remember what robotics company sponsored it or if it even was sponsored. It was just like a bunch of like super sort of like hardware focused cracked kids that were building this stuff. But they had like a dungeon cage robot war thing. Like kind of like the traditional robot wars, but it's like they've built them themselves, but like it's like humanoid robots. Sorry, is what I should be saying.
Yeah.
So like, they're on their feet and they're walking around. It's not like the ones where you've got a massive saw
cars.
blade in the middle.
Yeah.
Yeah. Although that was a class show actually.
Yeah, that was cool. One thing I did want to talk about was Mr. Harry Stebbings, his tweets. Very interesting.
With Sadiq Khan.
Well, Sadiq Khan, I don't think has actually
Replied.
replied
He's never
at
gonna
all.
reply.
Can you just like sort
Never
of
going to.
fill me in on what's I've
Well,
seen
I don't actually know how it started. I mean, I should probably have a look, but basically,
was after that bloke got his arm cut off.
What?
And the,
No, that
like,
was the, what?
like his Rolex was stolen or something.
yeah, it was so it was basically he tweeted about a news story. Murdered by a Rolex ripper outside famous restaurant in broad daylight. Masked mugger fatally stabs a man who tried to fight back outside a 5-star hotel.
He was wearing his Rollie.
Oh my god.
And so he basically tweets and tweets at him. And he's like 100 grand for 60 minutes of your time on a show with me. Murder for a watch in prime London. I mean,
Shocking.
it's fair. And he hasn't said anything. It's got to now 300,000. We've got Tyler Durden jumping in and adding some cash.
He's like an
into-
anon
into the stuff.
Twitter like account. I think he does that high frequency trading. He's at some like HFT firm in London.
And then the cherry on the top is Sadiq Khan's then pictured at Wimbledon. And obviously Harry tweets to that,
strategically used to like.
and it's like London's never been more dangerous. All these stats, and then he's like, yeah, the mayor of London, Sadiq Khan, didn't miss the chance to bask in the London sun for the Wimbledon final.
And he's in like a beautiful linen suit. It's a beautiful suit. It's an absolutely beautiful suit.
And so, so who knows if that's going to carry
It's
on?
not going to
I mean,
happen. I would love to see it.
I don't
happen.
think it would.
It's
but
not going to happen.
No way. It's like you're just gonna get.
It's a death trap. Yeah, it's a death trap.
Imagine
not
the
letting you do
clips
that.
that Harry would make off the back of that.
Yeah.
He would have the whole media company just like
clipping every
Yeah.
second.
Yeah.
Cool. I mean, all right.
I think
that's us done.
all right. Well, thank you very much
Well
for
done.
joining us, and we'll see you next week.
Thank you.